Okay, you're live. Good morning, good morning, good morning. You're live again. You're live again. Welcome to Pre-London Live Market Analysis with ProFx. Okay, I want you to, um, where you have, I want you to type in where you are joining us from this morning. Type in where you are joining from this morning. Okay, um, your name and where you are joining us from. Your name and where you are joining us from. Let's know you. If you are a newbie, if you are an existing trader, where you are joining us from. Morning, welcome to. Okay, Joshua, welcome, Josh. It's another day to milk the market. Welcome. It's another day. It's another day. Thank God for life. Thank God for preservation, for wisdom. Joshua, you're in good state. Yes, it's only from Spain. Yeah, Bonchidex. Oh, that's nice. Okay, good. Yeah, yeah. So, Bonchidex, where are you joining us from? So we have an international personality in the house. Spain. Very soon we're having from Dubai, from US, from China, from Japan. Why is that? We are global. Yeah. Okay. So very quickly, pre-London live market analysis. I want to first establish the reason for because there is purpose for everything. Right? What is the essence of this session? Every of our session have reason why we gather. So the reason for pre-London, okay, why pre-London live market analysis? So we are provide valuable insights into the market dynamics and key levels and the opportunities to watch out for as London session approaches. So this 7 a.m. pre-London market, because London opens by 8 o'clock, right? So it's advisable that before your market opens, you want to be on your chart 30 minutes or 1 hour before to prepare to set up your key levels because you don't want to be coming into your chart 8 o'clock. That's not that's not planning. So we have these 7 a.m. sessions to prepare ourselves for 8 o'clock, 9 o'clock, 10 o'clock opportunities. Okay, if you are trading New York section by 12, by 1 or 2, be on your chart 15 minutes latest, 30 minutes, 15 minutes, or 1 hour before your open session. This is why we gather here. So we can be able to maximize the opportunities before London session opens. Okay, so no time to waste. Let's go straight to the point. So we started something yesterday, okay, and I want to apply that for London session. We started doing what we call the 10 o'clock 4 hours candle range, um, sorry, edge, right? And we saw that 10 o'clock fell under 2 p.m. The close of 10 o'clock 4 hour candle range fell under 2 p.m. How? Our 10 o'clock candle is 4 hours. So it is 4 hours. It's 10 o'clock to 14 o'clock. This is when the candle closes. All right. 4 hour candlestick at 10 o'clock. We close at 14 o'clock, which is 2 p.m. So this is where we look for our opportunity to trade. This is for this particular edge. And I want us to know that in every single day, we have how many 4 hours candle do we have every single day? How many 4 hours candle do we have every single day? How many 4 hours candle do we have every single day? How many 4 hours candle? This is national low. What is national low? How many 4 hours candle do we have every single day? 6. Good. Okay. If you let's share this live. If you know anyone that needs to be here. Now we have six 4 hour candles, right? Every single day. And we have said that in one of the candles, 10 o'clock is one of the 4 hour candle that is very valid. So let's name them. We start by let me go to my chart. On 4 hours, let's name all those six because this is a game changer. This change your game. I can assure you. This will change your trading game. We have only six 4 hours candle every single day. So we start from 22 o'clock. This is our 10 p.m. Okay. After that, 2, 2 a.m. Okay. After 2 a.m., we have 6 a.m. After 6, we have 10. After 10, we have 14. 14 o'clock is what? Is our 2 p.m. Yeah? 14 o'clock is our 2 p.m. After 14 o'clock, we have 18 o'clock. 18 o'clock is our what? It's our 6 p.m. So let's count it 1, 2, 3, 4, 5, 6. These are the 6 4 hours candle we have every single day. So this is where we have the that ends the New Year section and we open early morning 2. After 2 we have 6. After 6 we have 10. After 10 we have 14. Then we have 18. Back again 22, 2, 6, 10, 14, 18. And we have said that out of these 6 we only need just 2 of these 4 hours to be successful. And we have seen one of them, which is our 10 o'clock. We have pointed out that this 10 o'clock, there is something about 10 o'clock, and we did that yesterday. We established the fact that there is something about this 10 o'clock. Okay? So I want us to list out all the time in these candles. So let me expand this. Let me expand this. So for my first one, I have in between this time, just follow me. This is 22 o'clock. So what? 22, 23, 24. That's 1, 2, 3. Right? So let me come to my just give me a second. 10, 11, 12, 13, 14. 11, 12, 13, 14. So 22, 23, 1, 2, 3. Okay. So for my candle, it is 22 o'clock to what? I think 3 a.m. Right? If I'm not mistaken, the 4 hours, 22 o'clock to 3. Is it 3 or 2? This one, I know this one is 10 o'clock. This one is 10 o'clock to 14 o'clock. Yeah. So that means this one should be 22 o'clock. 2 o'clock. Yeah. Let's confirm that. Let's confirm that. This is the first one. Yeah, it's correct. Second one, third one, fifth, and what? Sixth. Yeah. So let's continue. This one is from 2 o'clock. I mean, we have 2, 3, 2, 3, 4, 2, 3, 4, 5, 6. 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock. All right. For 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock. 2 o'clock to 6 o'clock. Then for this, we have 6 o'clock to 10 o'clock. For this, we have 14 o'clock. That is your 2 p.m. So let me put it as Nigerian time. 2 p.m. to 6 p.m. Let me change this to 10 p.m. 2 a.m. to 6 a.m. 6 a.m. to 10 a.m. 10 a.m. to what? 2 p.m. And finally 6 p.m. to 10 p.m. Can you see? This is our 4 hours candlestick we have every single day. Every single day. Let me screenshot this and send to the group. This is really going to change 6 4 hour candles. Six 4 hour candles daily. And we said for the New York section, they are going to be marking out the 10 o'clock. We're going to mark out 10 o'clock to trade from 2 to 5 or 6. Okay. I want us to look for a 4 hour candle that helps us to trade the London section. That's what we're going to do this morning. Okay. We're going to look for that 4 hour candle that is going to be responsible to trade the London section. So let us note that the 10 o'clock candle is responsible for the New York section. Write that in the chat box. 10 o'clock 4 hour candle is responsible for the New York session opportunity. 10 o'clock 4 write that in the chat box. Candle is what? Responsible for New York session opportunity. Okay, first, because this 10 o'clock candle, from that 2 p.m., you can be able to predict what 2, 3, 4, 5 will do. All right, 10 o'clock 4-hour candle is responsible for New York session opportunities. Write it on the chart. New York session opportunities. 10 o'clock 4-hour candle is responsible for New York session opportunities. 10 o'clock 4-hour candle is responsible for New York session. Let's now look for the candle that will be responsible for London on 4 hours. So to break our head on that. By backtesting, we will know which 4-hour candle is suitable for London session. Exactly. So let's see. Yeah, thank you, Francis. 2 a.m. Let's go back to our chat. So I'm already seeing that 2 a.m. will be the candle. I want to see consistency. I want to have a like we had for 10 o'clock. I want us to have a consistent 4 hours. A consistent 4 hours. Okay? 2 o'clock. Okay, I've seen something in 2 o'clock. 2 o'clock. Okay. 2 o'clock. Okay. I'm seeing 2 o'clock. There's something about 2 o'clock. 2 o'clock. All right. All right. All right. All right. Can you see 2 o'clock here? Okay. 2 o'clock. All right. I want to establish something. That's why I see something happens more than two, three, four times. I turn it to an establishment. 2 o'clock. Okay. 2 o'clock. CIT. Okay. Who is what I'm saying? Who is what I'm saying? Oh, Kaparada Deva. Okay, this is 2 o'clock. But this one, this one was invalid. Okay. 2 o'clock. CIT. Invalid. Right? 2 o'clock. CIT. Valid. Can you see this 2 o'clock? When they closed bearish, the next candles 4 hours were bearish, bearish, bearish. That means this 2 o'clock was a valid CIT that dropped. All right. 2 o'clock. Can you say again? 2 o'clock. After the CRT, 18 o'clock was the CRT candle. 22 o'clock was the manipulation candle. 2 o'clock was the first distribution candle. Even if you miss this distribution, when the candle still closed at 2 o'clock, we had a distribution. 2 o'clock. There's something about 2 o'clock. Let's continue. 2 o'clock. After distribution, we had a sell. So I've seen that you can pay attention to the 10 p.m. and 2 o'clock because sometimes this 22 o'clock gives you the introduction. For this case now, perfect CRT. Can you see how this is for these 4 hours? How we swept the 14 o'clock candle is the CRT candle. That means the high of the 14 o'clock candle after sweeping, we closed inside the range. 18 o'clock is inside the range, but that's not our candle. This is the beginning of what we're looking at for. 22 o'clock is inside the range. Okay. Then 2 o'clock also dropped. Can you see that now? And our take profit will be the candle range low, which is this fine boy here, which was smashed. So they have established that 2 o'clock is the candlestick that will be responsible for London section preparation. Okay, can we all agree about that now? You can do your own backtesting too. Why did price move the way it moved? And I see the reason behind it. I make it my pattern. Simple as that. That's where I backtest. I go back in time to see a movement and I go and check what made that movement to happen. I check the origin of that movement and I establish my facts. So from our establishment, the two candles we are interested in are what? The 22 o'clock, that's our candle, our 10 p.m., and our what? Our two. Our eyes are on these two 4 hour candles, preparing for London session. Are we together, guys? Have we 10 p.m. and 2? When you say 10 p.m., you meant 2 p.m. Nigerian time. 10 p.m. is 10 p.m. 10 p.m. is 10 p.m. Kingsley, are you on this? Are you on this call at all? Are you on this call? Every time I have here is Nigerian time. All these times are Nigerian times. I'm on UTC plus one. All these are Nigerian time. Okay. I'm on UTC plus one. So it's Nigerian time. Okay. So we are establishing that our 10 p.m. Nigerian and 2 a.m. Nigerian time of 4 hours are the candles responsible to trade London. Okay. 10 p.m., 2 a.m. So let me put it 10 p.m. So it is going to be specified 2 a.m. 4 hours. And 10 p.m. 4 hours means that it's 10 p.m., 10 p.m. to 2 a.m. The range of these 4 hours is 10 p.m. to 2 a.m. While the range of these 4 hours here is 2 a.m. to what? A.m. Are we getting this now? Are we getting the logic? Okay, are we getting the logic? Let me use black for this guy. Black for this guy. If it's clear, type in clear. So let's go to our chart and see these two particular time frames, 10 p.m. 4 hours and 2 a.m. 4 hours, to see how we can maximize the opportunity. Mind you, we are expecting the 4 hours to before we take action. Note that we are expecting each of the 4-hour candle to close. So if you are trading the 2 a.m. candle, you are expecting 2 to 4, 2, 3, 4. When 2 a.m. candle closes, it closes at 6 a.m. That's why 2 a.m. candle can trade London. I repeat, 2 a.m. candle is saying that we have 3, 4, 5, 6. As at 6 a.m., 2 a.m. 4-hour candle has closed. That candle is responsible to trade the London session. I repeat again, our 2 a.m. 4-hour candle will be lasting for 3, 4. By 6 a.m., that 2 o'clock stick will have closed on 4 hours. That candle is responsible to trade the London section. Or if you are dealing with your 10 p.m., 11, 12, 1, 2. By 2 a.m., that 10 o'clock candle will have closed. That's the candle responsible to trade 3, 4, 5, and thereabouts. So, so therefore, we are establishing that the 10 p.m. and the 2 a.m. 4-hour candle is responsible to trade the London session. So let's write that down. 10 p.m. 10 p.m. 4-hour and 2 a.m. 4-hour is responsible for free London and London opportunities. So let's in our on the chat box, everybody. I hope all these are also in your trading notes, not just on the chat box, because these are what you are going to refer to. Okay, 10 p.m. 4-hour and responsible for free London and London opportunities. What we are doing is called time frame selection, and we are being specific. That's the power of this concept. Is the concept time frame selection. That means we have no business coming to the market if we are not on this particular time. It gives you focus. Trade New York. I have to wait for my 10 a.m. 4 hours to close. That means by 2 p.m. I am ready. I have to be on my chart by 1:45 or 1:30 to prepare. For London section, I am dealing with my 10 p.m. 4-hour candle and 2 a.m. 4-hour candle. So I have no business on the chart aside from this particular time. So the concept is called time frame selection. It helps you to avoid over trading and helps you to focus. All right. If you're getting value, type in value. If this is making sense, type in making sense. If this is making sense to you, let me know. It's a called time frame selection concept. It helps you have cost trading and simplifies. We have not talked about this. Is not you have not entered market structure and all this. This is framing your edge. You have not entered market structure yet. We want to just know the time frame selection so that you know what you are doing. Okay, time frame selection. Does this make sense? I need to get feedback from you guys if I continue. For New York, I said 10 p.m. You wrote it on your chat box. 10 o'clock candle 4 hours is responsible for New York, and 10 o'clock candle is 11, 12, 1, 2. So by 2 p.m., your clock candle will have closed. So it is from that 2 p.m. close. 10 o'clock candle is yeah, it's Nigerian time. 10 o'clock is 10 o'clock. 10 o'clock in the morning, Nigerian time. 2 p.m. in the afternoon, Nigerian time. Everything here is Nigerian time. 10 so, so let's go back to our recent chart and see how to apply. So I don't have too much backtesting. I just come to my chart. Let's see something again. Can you see? Can you see this? Everybody see? This is 22 o'clock. This is 2 o'clock. So as at 22 o'clock, we have bearish candle, CIT. This can help us to trade the next 4 hours or next 8 hours. So once this guy closed bearish, that's giving us a sign that this is a CIT model. We will talk about this more in the mentorship. I'm just giving an example. So this is a sell. So let's go to our current chart. So the one that happened yesterday, let's look at what happened yesterday first before looking at what happened today. Let's backtest yesterday. Let's look at it. This is what? This is 22 o'clock, right? And this is what? 2 o'clock. From this 2 o'clock, as it's selling, we expect the rest 4 hours to sell. So what you can do is, if you are a swing trader, once this guy closes bearish, just enter sell and put stop loss above. Leave am. This is the simplest strategy ever for beginners. Once the candle close sell on 4 hours, just knack am better lot size. Or the knack am sell, put stop loss above. This guy is coming to first take this target first. Can you see how I smash it? Next target is this guy. Can you see what I'm showing you guys now? The power of your on 4 hours. Hey, okay. So your time frame. This is our two. Let me come again. Okay. Um, so if you are using swing trading, your short position is once your candlestick close bearish, sell. Your stop loss will be wide. Okay, will be wide. This is 25 pips, which is not bad. But your risk to reward will be like 1 to 2 thereabouts. And this is 1 to 2.5, which is not also bad. So swing traders don't have high risk to reward. Okay, but they have a good win rate means that they have more wins than losses. So swing traders, they don't have a good. They have 1 to 2. At most, they have 1 to 2. They don't really have 1 to 3 like that, unless if it's a very massive sale. So what they have is 1 to 2, and it's fine. Okay, if you are trading prop firm, 1 to 2 will do you good. So imagine you have this. Let's now reflect. Once 2 o'clock candle closes, what do we do? We sell. Your stop loss above 1 to 2. You are done. You don't close shop. Wait for what? New York section. What do we see here? 10 o'clock candle. What do? Sell. Stop loss above. Let's just take profits, your next target, or the next target, which is here. 2 sell yesterday. Can you see now? And again, I always say that market is not 100%. Okay, the market will not always give you 100%. Just stick to your rule. when you see your setup execute, some will be winners, some will be losers, but overall, you will be profitable. Is that clear? So when next you see your candlestick closes, you don't wait for all those things. When you see your confirmation candle close, enter sell, put stop loss above, and take profits at your target. Is that clear? This for swing traders, swing traders, swing traders. Those that don't have time to trade in the day. Once your 4 hours candle has closed for the last time, you sell, put your stop loss above, and put your take profits at what? The target. Screenshot this as a swing trade. Let me install this as a swing trade. So my journaling now would be so I want to now journal this notes now. What do I say? You can just put I can say two. This is 2 o'clock, right? So I put a note and say 2 a.m. 4 hour. Okay, something just to make it feel as if like to make you note. So this is a 2 a.m. 4 hour candle. Okay. Oh, okay. Is that clear? Very clear, right? There's no ambiguity about swing trading. Once you see your confirmation, you enter sell. So let's now do the one for 10. Let's now check the one for 10. I give an assignment for this you'll be using. Pick 3 to 5 pairs you will be what? Using. Pick 3 to 5 pairs you'll be using. This is crazy, oh. 1 to 2.5 and 1 to 3.5. That's 1 to almost 1 to 6 for swing trading. It's crazy. It's crazy, man. So this is what we have for this is a 10 a.m. for swing trading. Trading for swing trading target for swing trading. In a house, you are very, very, very busy. You don't have time to for charts. Let me see you. Signify. This is your solution. Swing traders, let me see you. Swing traders, let me see you. Go and back test this thing I just did now. Go and back test. You only have two time frames. Your 2 a.m. or 10 p.m., then your 10 a.m. Come and pay your tithe later. Come and pay your tithe. Do you have swing traders in the house? If you are very busy, you don't have time for analyzing the chart. Okay, you can just apply this particular edge. All right. Ego Francis, are you a swing trader? Are you a swing trader? Yeah. Okay. So let's look at what we have today on USD. Same principle. I have my pairs I've selected. So I'm going to delete everything and see what we have today. So today, Tuesday. What do we have on the chart? This is 2 o'clock and this is 2 o'clock. There's no opportunity yet for us, okay? Because price has sold already. We are now in oversold, so we can't be selling. Nothing. We can't do anything here, right? We are in the oversold. So I wait for my 10 a.m. to happen for me. This has oversold already. So my 2 o'clock did not give me a sell, and I can't start. I can't start buying yet now. Out my key level here. This is a key level because this is a demand zone. Key levels are demand, order blocks, liquidity, and all of that. So this is a demand zone. All right. This is a key level of a demand. Should I mark this now? Demand. Yeah. All right. So I can't do anything yet. Yeah, I have to wait for a confirmation. So I'm waiting for. If I want to buy, I want to see price break and close above this demand. If I want to buy, if I want to buy Euro USD, I want to ensure that my 4 hour candle does what? Breaks and closes above this demand. Then I'm what? I am bullish. Is that clear? If I want to buy, I must see my 4 hours candle break and close above this demand. Then I am bullish. If I want to sell, I must see my 4 hours bearish candle break and close below this demand, then I am bearish. So what do we do? We wait. Okay? We wait. If you miss your 2 a.m. and your 10 p.m., if you miss your 2 a.m. and your 10 a.m., 10 p.m., just wait for your what? Your 10 a.m. in New York. Don't stress yourself. Okay, still on Euro USD, let's check out our daily time frame before we go to the next pair. Still on Euro USD, let's check out. So, like I said yesterday, every low and high is what? Liquidity. Yes or yes? Every low and high is liquidity. It means that this particular now is a what? Liquidity to be targeted. Every low and high is what? Liquidity. So let's observe how it's going to work around this liquidity. Are we going to use this fair value gap and this demand? We don't know. Okay, we have to be. We don't know what price is doing next. Just set your key level and watch. That's our job. Our job is not to like to predict what next. It's just to set your key level profits. Okay, I want you just to mark out key levels for price to respect it and execute. That's what we do as technical analysts. Mark out your levels. We wait for price to respect those key levels. Then you execute. So I suspect that we might have sell again today, or price might want to drop this demand, then now continue. But this is my key level. This is a key level below my liquidity, and this is very, very valid. This key level is valid. This demand key level is what is valid. All this sell that happened, it happened because price wants to come into a demand zone. Okay, from daily time frame, can you see that this is expansion? Everybody, look at this carefully. From daily time frame, can you see that this is expansion? That is your break of structure. Okay, break of structure has given us higher low. Sorry, higher low and what? High. So this is the structure. We are still bullish on the daily time frame. Okay, what we are just seeing is what? A pullback, higher high, external higher low, external higher high, external higher low. So let me screenshot this and send to the group. This is what on a daily time frame. Okay, and in this external low and high is our range of premium and discounts. So the reason why we had that drop yesterday was because we are already at the what? At the premium zone. At the premium zone. But now, this wait for price. So we have this premium and discount. So in the premium and discount zone, we saw this drop was the reason we are already at the premium zone. Why this guy dropped was because we have this location. Sorry, please. So we had this drop yesterday because price was already at the premium zone at the other block. Okay, this is the reason we had this drop yesterday. We had we are already at the premium zone with this daily order block. I'm trying to do a back test so we can know where we stand currently. Okay, yesterday's drop happened because at the premium zone we are at the what order block. Look at it carefully. Above 50%, above 50% is premium, below 50% is discount. So everything above here is premium. Sell, premium, sell, premium, sell, premium, sell. So we look out for key levels at the premium zone to sell. Okay? Look out for key levels at the premium zone to sell. And what are these key levels? Number one, key levels at premium zone to sell are your order blocks, your supply. Key levels at premium to sell, order block, supply, supply, retracement. Hold on, please. I need to close this group. Okay, key level at premium to sell. We have order block, supply, Fibonacci retracement. Now let me ask a question. What key level is price used to at this premium? Look at this chart carefully. What key level the price used to drop at this premium zone? Was it the order block or Fibonacci retracement here? Was it order block or supply zone? What key level did price use at this premium zone for this sell to happen? Question. What key level exactly? Order block. Yeah, order block. So we have a daily order block here. And what's an order block? Order block is when you have, for a bearish order block, you have a green candle before a massive what red candle. And price came back. He used it first time here, second time, third time, and Monday we dropped. So currently we are on a demand zone in a discount. So once I see a confirmation, I won't be buying. Price still has to fulfill all the sales first. But let me put in the demand again and prepare for this. So this is a key level, a daily demand key level, which we are currently at. So let's go to our lower time frame to see if there is an opportunity for, okay, it's 8 o'clock already. Let me check something on 15 minutes. Okay, so I'm on 15 minutes now. 15 minutes now. We are in the daily demand, and price has given us this. So this Asian range. Asian range is 24 pips. 24 pips means we are consolidating. So I might expect to see that price will start reversing for me. If I see a confirmation from this demand zone, I will start buying. Okay. If I see a confirmation from this demand zone, because what we have just done is we have just manipulated Asian. Okay, Asian what has been swept into a daily demand. So if I see a confirmation on my lower time frame, I might start buying Euro USD because we are on a daily demand. That's one. So I want to use my CRT for confirmation. We are on what? Daily demand. That's one. See if a CRT will give us confirmation, confirmation, confirmation. What is my confirmation? My CRT. Okay. If I want to buy, I need to see a sweep of my CRT candle. If not, I'm not interested. This is 7 o'clock candle. What do I do? I mark my candle range low. I mark my candle range low, 1 hour candle range low, and what? 1 hour candle range high. If, if I want to buy, what am I expecting? If I want to buy, what am I expecting from this candle range high and low? Quick, 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 quick. I have seen my accumulation. If I want to buy, I've seen step one. I've seen step one. Step one is what? A red candle accumulation on my key level. What's step two? What is step two? Step one, accumulation candle, and this is 7 o'clock. Okay, I want to trade London session based on our 1 hour CLT model. I want to trade London session based on my 1 hour CLT model. What is step two? CLT is candle range theory. All these things will be dealt in the mentorship. We are just analyzing the market. So if you are new here, just be watching us and paying attention. What is step two? What is step two? What sweep the candle range low and close back inside the range. To wait for this next 1 hour candle to sweep and close. If not, I am not interested in the buy. For me to have a buy bias here, I must see price do what? Price sweep in this low and closing back into the range. When I see that, I can buy to my candle range high. This is my buy scenario. Okay, this is my buy scenario. So let me copy this and paste on the group. This is my buy what? Bias. So I will update us. If you're not on the 100 days group, right, you gotta join. That's where we update and send signals. So let's go to other pairs. I'm done with EUSD buyers. Let's go to gold. Let's go to gold. XAU USD. XAU USD. XAU USD. Give me a pair. Give me the pair you want to analyze. Give me the pair you want to analyze. Okay, let's start with our 4 hours, like we did on Euro USD. Then we go to our 1 hour. All right. We mentioned 10 p.m. and 2 a.m. So let's quickly check. Let's quickly check 10 p.m. 2 a.m. Let's quickly check. Okay. I'm seeing something here. This is 10 p.m. 2 a.m. Check. This was a very good opportunity for us. Okay. Very sweet opportunity. Our daily range candle high was swept. Our daily range candle low was the target. Very sweet opportunity for us. This is how to backtest. Look at it again. No, it's not daily. 4 hours. Sorry, 4 hours. 4 hours. 4 hours. Candle range low, and we saw that we had a sweep of the candle range high, targeting the candle range low. In this case now, this is an example of multiple CLT. In this case, example of what? Multiple CLT. It took us 1, 2, 3, 4, 5. Then the sixth candle was what swept the candle range low. So this is an example of 4 hours candle range theory multiple. All right. Okay, what's this one here? XAUSD 1 hour. Okay, we are coming there. We're coming there. Example of multiple candle rate CLT. We are trying to confirm our 10 and 2, 10 and 2, 10 and 2, 10, 2, 10, 2 a.m., 10 p.m., 10 p.m., 2 a.m., 10 p.m. So this is what is giving you the edge. This is 10 p.m., 10 p.m., right? 10 p.m. Uh, 10 p.m., 2 a.m. right? And what 10 p.m. These are, sorry, 10 a.m. rather. So I'm just giving you the bias for, and this is consistent. Your 10 p.m. 4 hour candle, your 2 a.m. 4 hour candle, and your what 10 a.m. 4 hour candle. Okay. Okay. 10 p.m., 2 a.m., and what 10 a.m. 4 hour candles. CRT, CIT. So let's go back to our current day and check out for those candles I mentioned. You can do your back testing later. So let's see how yesterday played out first before we talk about today. So for yesterday, 10 p.m., 2 a.m., and what 10 a.m. So 10 p.m. was bullish, 2 a.m. was bullish, while 10 a.m. was bearish. So if you look at what happened for the, can you see the alignment now? This was a CRT candle that confirmed our, like we said yesterday, that confirmed our 10 a.m. sell. Okay, since we had a CRT here, we expect market to sell afterwards 10 a.m. and that's it. Sell all the way down. Once again, if you are selling from 10 a.m., what do? Put your sell there and stop loss where above for swing trading. For swing, but gold has a very crazy pips. So gold is very crazy. You can't do this for gold though. You now have a good risk to reward. All right. So let's go to lower time frame and see what we have for today. Let's see what we have for today. Cha 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 cha. 10 p.m. 2 a.m. What's 2 a.m.? 2 a.m. is what? Is CRT. That means we expect today to also be bearish. All right. 2 a.m. CRT. Sorry. 2 a.m. has given us a sweep. So we expect if we see a close inside this, we expect market to what? To drop. So we are bearish on gold. We are bearish on gold. Bearish on gold. We are bearish on gold until further notice. We are bearish on gold until further notice. We will have started selling from here, but we missed this particular one. 7 o'clock was our sell. But no problem. We are bearish on gold. So we missed this sell on 1 hour. This should have been our first sell. At 7 o'clock, sell and put your stop loss here. And our take profit is going to be here. But we have missed the first one. No problem. Wait for a pullback. So we are bearish on gold. You are bearish on gold. Wait for a pullback. We are currently respecting this fair value gap. That's why that sell is happening. So we are bearish on gold. We are bearish on gold. Does anyone have another bias on gold? I am bearish on gold. Where's my fair value gap again? 1 hour fair value gap. 1 hour fair value gap. Okay, yeah, good. So I need to see a pullback to continue this bearish move. What do? I come down to 15 minutes, 5 minutes to see a what? A pullback. A pullback. I'm looking for a pullback for gold. Let me on my Asian range. Okay. So Asian eye has been swept. Good. And what distribution? Perfect. So where's my pullback? I have order block here on 5 minutes. So this is my entry on gold. I'm expecting price to retrace here for my first entry. Then second would be the fair value gap plus order block, which is here. So I'll rather put it there. I will use my fair value entry for this sell. So I'm selling gold here. My stop loss is above, and my take profit is the New York low. So this is my entry for gold. I will send this to the group now. This is my entry for gold. XAU USD setup. Sell limits. Entry price is 3318.79 is 3322.91. My take profit is 3301.89. So the stop loss, how many pips is stop loss? Stop loss is 41 pips. CP is 169 pips. Gives the reward of 1 to what? 1 to 4, which is not bad. 1 to 4 risk to reward. So I have that gold setup. Okay. So what other instrument do you want us to analyze? Let's use our CRT to confirm this cell. Let's use our one hour CRT to confirm this cell. Let's use our 1 hour CRT to confirm this cell. So it's confirmed already. We have our 1 hour CRT 6 o'clock, swept 7 o'clock, blah. So we are selling. Okay, we are selling already. So 6 o'clock CRT Swept 7 o'clock, confirm sell, stop loss, but we missed the first one. So we are selling. All right. We are selling, we are selling, we are selling, we are selling. What instrument do you want me to analyze, or we call it a day? So we have either selling from here or at best selling from the fair value gap plus order block, like I said. So two ways, two ways. You either sell from here or sell from the fair value gap plus order block. But I think it's advisable to sell from the fair value gap plus order block. So you have a good risk to reward. Yeah, right. Who have a question? Who have a question? Who have okay, if there's nothing else, let's converge at the group. Let me send, if you are not on the group, I will send the link to the group on this call. So join the group. We send signals there every time. All right. So let me again. If you are not on the group of the 100 days, join. So that's the group for the 100 days. Or reach out to me on my WhatsApp. More inquiries. Okay, you want to learn more, right? And that'll be it for today. So we're going to meet again by 1:45 to trade New York section live, same channel, same station. Tomorrow again we converge here for 7 o'clock London analysis. All right. So happy trading, happy trading. Join the group. We send signal. I'll update the analysis on the group. So join the group for the signals updates and all of that. All right. Cheers, guys.